you get a pullback. Why? Well, because the market has gathered the liquidity that was above this high. Okay, and right now they are retracing back, which is a form of a liquidity grab. Right, so then as we're here, where is the next liquidity point? Well, it's either below this low or above this high. Okay, so then if the market goes on and actually takes this liquidity, it creates a trend change, right? We're now bearish on this market, and what happens next is we start to correct. Why? Well, because we collected all the liquidity that was resting below this low. So those are pretty much the single lows and single highs. What you can also have is equal highs and equal lows. And usually you're going to see them as double tops, double bottoms, ranges, pennants, I don't know, triple tops, everything, right? And I'm actually going to give you an assignment in a bit. I want you to go and spot all double tops and double bottoms. What you're usually going to see is the following. If I can only find my mouse, right, there it is. We have a double top, right? And what the market is usually going to do is something like this. And then you're like, oh, double top, I'm going to short the market. But usually within every double top, there is a spike above, and that is when the market reverses. Why? Well, because the stop losses of buyers are right there. Right? Sorry, the stop losses of sellers are right there. And the buyers that are actually looking for the breakout, they're going to be entering buys right there. So we have stop loss of sellers and buy stop of buyers. So on this fake move, which we had a look at the previous lesson as that fake move, the manipulation, right? Sellers are stop lost, right? And then the buyers are triggered into the market. And this is when we actually get the real move. Okay, similar example on a double bottom. You get a double bottom, and usually the market is going to give you like a little reaction to trick people into buying the market. They have their stop loss below, all right, and then the market just does a little wick, boom, takes it out, and then it reverses. Okay, so again, double tops and double bottoms are imperfect, but this is because of liquidity. Okay, and when you see like perfectly equal highs or equal lows, you know that this will eventually get taken. The next type of liquidity is structural or supply and demand liquidity. So those are old supply and demand zones or structural levels. By structural levels, we mean higher lows, higher highs, and lower lows, right? And those are levels from which traders are actually taking trades. I'm going to show you a textbook example later. Another liquidity type I use is a fake trend change, right? What many of you know as a fake CHOCH as well, because I see this concept used a lot, the CHOCH thing, right? So this is pretty much the same. You get a trend change or you get a CHOCH, and then it just gets stop loss, right? Why? Because of liquidity, and I'm going to show you later. The next one is trend line liquidity, which I don't like, right? And I pretty much classify this as flat highs and flat lows, right? You can have also flags and channels. This is very slow and correcting price action. That is overall trending. Okay, so again, we have, if you want to have a clear trend, usually you're going to have like a nice push, nice pullback, right? But the corrective one, it looks something like this, right? It's still making higher highs and higher lows, but it's very corrective. And then usually you can draw a trend line on the top, on the bottom, and then this right there is going to be your liquidity. So again, more examples on that later. But those are the types of liquidity I personally use, right? There could be more. You can add imbalance, you can add this, you can add that. It doesn't matter. What matters is what works for you and what is actually easy, simple, and systematic to understand. So let's cover them one by one. Highs and lows liquidity. So again, as I previously mentioned, every high and every low has liquidity. It could come in three ways: a single high or low, equal highs or equal lows, and pretty much you can have like inducement levels or an old high and old low. Okay, so, and I want you to remember that higher time frame matters the most. A high or a low on a higher time frame will always matter more than one on the lower time frame. So let's just have a look at the examples below right there. So here we have a supply zone that is formed. The market has pushed away, it's pulling back, and then usually what happens is it starts to pull away from this zone. This singular high is what a lot of people call inducement. But what is this? It's just a single high. Okay? Why is this weak? Why is this liquidity? Because if this high fails to make a new low, just like this, then it's weak. Remember, this goes back to the market structure lesson. Strong lows, strong highs, weak lows, weak highs. Okay? And usually what this does is it tricks people into selling. So people are going to sell from here. Where is their stop loss? Above right there. Pushes, pulls back. People are going to sell from here. Where is their stop loss? Above. So what we also have is like a descending trend line. Then the market does the manipulation, comes into the supply zone, and then it sells off. Okay, so this is one of the types which is also called inducement. This is just like a single high. Usually they are located, a little tip right there, they're located just below a supply zone or above a demand zone in the opposite case. Okay. The second one is equal highs and equal lows. Okay. We have that same push to the downside and the market pulls back towards the supply zone. And what it starts doing like a little consolidation, forming equal highs and also equal lows at the bottom. Okay. So what does that mean is that the market is prepping for something. And again, if you just think logically, people are here seeing a triple top. What are they gonna do? They're gonna try to sell the market because they think it's ready. Where is their stop loss gonna be? Just above. What does the market do? Manipulates above their stop loss, taps into the actual supply and demand zone, right? And then it dumps. And where is the target? The first target is, of course, the equal lows that are like the next opposite liquidity target. And the next one is gonna be the weak low. Okay, so those are equal highs and equal lows. And the final one is very simple. This is like what you're going to see happening a lot. You have like an old high somewhere on the left, right? And then the market does all sort of fun stuff, right? This is where you can actually be looking to long the market because we're in a push, pullback, right? And then the market attacks that high, takes out the weak high, but then a lot of times what you're going to see is that the market then massively drops lower and creates a trend change. And as I told you, you cannot spot liquidity before it has actually happened, right? You cannot say, oh, this high is liquidity and after the market takes it out, it's going to reverse. No, because then to me here, the market is actually making a structure break. And what I'm going to be doing is I'm going to be looking to take a long from right there. But then if the market makes a trend change in the opposite direction, that is when I can say, all right, we took out the old high, we made the liquidity gap, we created a trend change, and that is when I'm actually ready to go short. Okay. So those are the highs and lows liquidity examples. Those are the three types that I use. My favorite one being the inducement one and the equal highs and lows. Because again, with the singular one right there, I am not going to be considering this a liquidity grab until we make a trend change. So this is a very important point for you to note. So let's have a look at some examples. There examples. There is one, and I think we have, we pretty much have all of those at one place. So what we have right there is, if I just grab my laser because I had some, hopefully you can see this, right? So here we have a major high, right? And then the market massively dumped lower. It's overall bearish. We created like a pullback. So what is this right there? This is, I would say, flat liquidity. This is flat price action, right? But again, within the flat price action, you're also going to have like a major low, which is right there. Okay, what the market does, it comes in and like spot how it got taken. Look at that massive wick. So the market came in, lots of rejection. It just filled in the wick. And then after taking out the slow, we just massively expanded. So this is again a great type of like a liquidity grab where you have like flat price action, takes it out and then massively reverses higher. Where does it go? Towards this massive major. This is an old high, right? What happens after we take out an old high? Well, we get a reaction, right? And we had a very nice push to the downside. What is this? It's a higher low. Do we get a long from here? Absolutely. Where is our target? The weak high. We come in, we take out the weak high. Beautiful. Okay. And what you can see right there is that, again, if I just get my drawing to, is at this time, I would be saying that this is a structure break. This is my demand zone, and I'm potentially going to be looking to long from here. But again, in hindsight, what we can see is that the market took out this high and then caused the trend change. And after this, I can say, well, okay, then this old high got taken and it caused the reversal. So that right there was a liquidity grab. And this is why I don't love old highs and lows, because we don't know if it's going to be a liquidity grab or if, again, it's just going to be a break of structure, pullback, higher low formation, and a continuation higher, right? What we can see right there, very flat. So equal lows on the bottom and equal highs on the top. What happens is the market takes out the equal lows, right? And then what it does, it forms a trend change. So there is a structure break happening right there. In fact, the trend change, okay? What caused the trend change, to track it back, it's this low. So this is technically